What's going on, people? It's GBP Baby. Today I'm just going to show you this week's trades I made. I'll show you my entries and why I made them. I made them on the FOREX.com demo account. So here is my first one. I'm just going to run through them quickly because I've just made a 20-minute weekly review that you guys should 100% go and check out. This was my first entry on Tuesday. It was a sell, and that should be here. Let me get the exact price. Well, it was this candle anyway. This was a sell because I saw a breaking market structure here. It was during the London session. I waited for a retracement back up. As soon as we traded above this, I had a limit sell. So of course we traded. I put my stop loss above here because I realized that, okay, I'll show you guys. Let me break it down more clearly. So from here to here, we got obviously discount, premium. I wanted to be selling at a premium, so I looked for all the premium arrays, and then this was our first one, this fair value gap, which is why I put my sell above here, which happened to be on the 50% level. So price traded to here, my sell got executed, and then I put my stop loss above here because one, we've already broke down structure. This is a bullish order block. This is a bearish order block, these candles. This makes a bearish order block on a higher time frame. 50% level of that, price shouldn't really be trading above that. So that means that this high should be defended. And so it was. So price did come close to it, but it didn't take it out, just as expected. And then I exited my position down here, below these lows. Obviously we traded lower, but I was obviously happy with the move simply from here to this low. This was a very basic entry, this is a classic pattern, and a classic ICT optimal entry. We trade down aggressively, take out relative equal lows, retracement, enter on the retracement, as you can see, above the 50% level. This is probably one of the most important things about it. In order for you to have good entries, it has to be above the 50% or below if you're buying, because remember, you want to be selling in premium and buying in discounts. If you don't, then you'll get caught up in this mess, and it's just not worth it. Price didn't spend very long. It consolidated and obviously came very close to the stop, but then it broke down aggressively, because at the end of the day, that's what it needed to do. And then I had my take profit at this level here. So that was a good trade. And then what else did I do here? This was probably my biggest trade of the week. One of them. Again, similar entry, another sell. So price, I saw a breaking structure here, came back up to the fair value gap, looked at the range, which should be this high to this low. Above 50% again, I looked for the fair value gap here. So I put my sell here, and I put my stop loss up here, and then I exited over here. This is a daily fair value gap. I'll go up to a high time frame. Where was we? Here, yeah, this day. So here's the sell, and then I had this. Let me just quickly show you on the daily. I had this drawn out already, so I knew price was drawing to it, which is why I was happy to let price just trade into it before selling. Obviously, we reached the bottom of the fair value gap, and also I low-key forgot about the trade, but I got out as soon as I realized how deep into the fair value gap we were, and then that was a successful position. And then my final trade of the week, but again, that was the same kind of entry as I did on the Tuesday in terms of understanding, a breaking market structure, classic ICT entry, optimal entry, breaking market structure, fair value gap left behind, bearish order block, put a stop loss above here, entered on the fair value gap, and then got out at a discount PD array that I already had marked out, which was in this case a daily fair value gap. And then with the bearish mindset, by the way, I knew we were bearish because of this breakdown in structure we had. And at this time, I don't even think I had the Sunday levels marked out, but now that I have them marked out, I can only imagine my trades are going to be much more precise. And then my final trade, which was on Friday, and I don't usually trade Fridays, but this Friday was special. So what did I do here? So I actually had a sell position above this swing high here. I saw this is engineered liquidity, created this swing high, took out this sell side, created all of this consolidation. So as soon as it traded above this, my sell entered. I did talk about this trade on Friday and how we were actually consolidating and flipping around this level for a solid 4 hours before price decided to finally break down. I got out just below this low. Obviously we traded much lower towards these levels, which I was expecting, but because of how consolidated we were, it one made me nervous, and two, this is where I should be exiting my trade anyway, considering we're getting in above this sell side and we should be exiting below this buy side, because this is acting as an equilibrium. Consolidation is equilibrium is fair value. Obviously it traded above fair value into what would be deemed as a discount, but because it's a sell, it's a premium, so use that as a sell opportunity, and then price broke down aggressively. Hope that makes sense. But yeah, those were my trades this week. It is a matter of having narrative. Make sure you understand the narrative. It's understanding the overall narrative for you to successfully enter. It's not just me hitting go. Also the time of day, like this was entered in London. This was entered 8:15, so that's in right before the news release, which is at 8:30. So that's during New York, and this was done during London. Was this during London? 5:15. So it was just after London. But you know, you gotta be very aware of the time of day you're trading. Like for example, I don't tend to trade after 12 o'clock. London's usually my favorite. There would have been an entry on London here as well, but basically I did want to trade. I remember on Tuesday I did want to trade this move from here to here originally, but I was asleep, so that's why I got in here, knowing that for the rest of the day it's likely to trade it lower. For the next session, that being New York, it's likely to trade lower, and that's what happened. So that's why I was confident enough to trade in at 5:15 as opposed to my original plan, which would have been 2:45 if I had been awake. So I would have what I would have done is I would have done this swing high to this swing low, looked at all the premium PD arrays, got fair value gap here, put my stop loss above here, so I would have maybe put an SL here, price trades up to it, and then put my exit here, and that's what we had. I might be making it look easy or sound easy. It's not. Like, it's narrative and understanding. Keep watching my videos, and I'm pretty sure you'll be able to get there eventually. But I'm not a millionaire yet myself, so we're all learning here. So thanks for watching, guys. I'll catch you tomorrow, Monday. Don't forget to check out the weekly review. And yeah, peace.